Hi, in this video I'm going to cover 10 factors on how to influence the interest rates on a home loan in your favor. Let's get right onto it. Hi, my name is Ajay, and in this channel I'm going to show you how to buy a house here in Germany. First up is the current market rates. Well, there unfortunately is no way to influence that, neither for you nor for me. So there is no positive influence possible. You might want to wait a couple of days to sign off on the home loan in case the home loan consultant suggests to wait, or the bank says, look, interest rates are decreasing right now, we might want to wait a day or two, but that's nothing on a major scale. We're not talking about 1 or 2%, we're rather talking about 0.05 or 0.1% in that area. Second one would be the total amount and the term of the loan. Now, depending upon the amount of the loan, some banks have thresholds at 50K, at 100K, 150K. If you go below that amount, the banks might even not want to finance you, or say because of that low amount and the same amount of effort we need to put in to sign off on the loan, we are increasing the rate of interest rate. Right? So please try and play around a bit with the exact amount of the loan. Discuss this with your home loan consultant or the bank to see whether 5 or 10K here and there may make a difference for you. The other one is a term of the loan. So there are different rates for different banks at 5, 10, 15 or 20 years. And depending upon what's important to you, if it's the security or the term of the loan or paying off fast, you might want to change the term there as well. In some cases, and that's what I've seen in the past, and I regularly check for my clients, is whether a 20-year term is lower than a 10-year term. Now, there are no drawbacks there other than you gaining security. The pro is that even after 10 years, you can give notice to that particular bank and a particular home loan contract. Because you being a consumer, you're allowed to do that. Hence, a 20-year term has only pros for you: increased security as well as the option of giving the contract notice. Third thing would be valuation of the property and loan to value. Now, you need to know that banks always have a look at their risks, right? And their risk is defined or told in terms of loan to value, which is the amount your loan you're taking in ratio to the amount the property is worth, right? So if you're looking at a purchase price of 500,000 euros and you're taking a loan of 500,000, then your loan to value is 100%. Now, but if the property is worth, let's say, 600 or 700,000 euros and you only want 500,000 euros loan, the bank sees a lower risk, and in this case, because of their reduced risks, also reduce the interest rate. Right? So please have a look at whether the property is really worth it, and please don't buy overpriced. A good home loan consultant will give you an indication on the bank's perspective and their evaluation as well. Fourth one is available securities. Now, it's all about reducing the risk for the bank. I'll cover that more than once in this video. So if you can reduce the risk for a bank of you not paying back your loan, you may give them more collateral, more security. What securities can those be? It could be a life insurance policy, which they accept. It could be other properties which you own in Germany, which can be taken as security as well. So please discuss this option if additional securities are available to you. Fifth one is your credit rating, your Schufa score. Now, you can positively influence that in two ways. First, don't have a negative remark in Schufa at all. So what you can do is check Schufa score upfront to see whether banks are looking to finance you or not. That is part one. And part two, be consistent in paying your loan, paying other loans, paying your personal loan, paying your mobile contract, paying GZ, the ARD and ZDF radio invoices, right? So please do that upfront so that the home loan consultant can guide you on whether a bank is giving you a loan in the first place as a gating criteria. And the second one, checking the better the score is, the better interest rates you will get. Another factor is the net sustainable household income. Now, that's all income in hand after taxes for the full household, which includes your spouse's, your kids if they're already working and still living with you. And the higher that is, the less risk is there for a bank. And hence, again, they'll pass on the less risk for them onto you in terms of lesser interest rates. There are some banks which in the past have given better interest rates of 0.1, 0.15% for high household incomes. Right? In that particular bank, the threshold was 5,000 euros a month. So if you had earned 5,000 euros a month as net income, that bank would have given you benefit of a better interest rate. Now there's small other things which we need to take care of in that department or in that space. One is the probationary period. Obviously, banks don't like risk. You being in a probationary period is a risk for them, because you could say with the 2 weeks notice, I don't want to work with you anymore. And vice versa, the company could also say, look, you've been a great asset for us, but we don't need you anymore for whatever reason. That's an increased risks. Not many banks give a loan in a probationary period. Now, what can you do? Either wait till the 6 months probationary period is over, that is part one, or you could also ask HR and your manager to waive the probationary period off. It's a one-side letter by HR saying XYZ is the best employee we ever had, and we are happy to waive off the probationary period with effect of XYZ date. Right? That's going to be sufficient for your home loan consultant to showcase to a bank and then open up a whole range of new banks which would otherwise not be willing to finance you. Obviously, you could also increase your income, get an increment at your current company, open a side business. Stuff like that obviously will increase your sustainable household income and thus also decrease risk at the bank and thus decrease interest rates for you at certain banks. Right? Not all of them do this. Next up is usage. Now, own use banks see as less risk. Investment properties are seen as higher risk. Not high, but higher, right? Because there is always a risk of the tenant not being able to pay his or her rent for whatever reason. Or you don't have back-to-back contracts and you don't receive rent for a certain month, right? That's a risk which they pass on to you in terms of a higher interest rate. So if you're buying a property and you're uncertain whether for investment purpose or as own use, the own use property will always get a lower interest rate. Right? Plus, second part in this, in the usage part is you may be eligible for certain subsidies. For example, the KfW 124 subsidy, which you can put in as part of your home loan, which also would reduce your interest rate. And that subsidy is only available to people who are buying for own use. Right? Next up would be terms and conditions. Now, there are certain terms and conditions which influence the interest rate. For example, the option of paying a lump sum every year. In most cases, that's 5% of the initial amount. You'll be allowed to pay a lump sum to reduce the residual principal. But if you don't need that option, if you don't need that flexibility, you may ask the bank whether they're okay to delete that clause and instead reduce the interest rate for you. Right? Some banks entertain this, so please ask your bank or your home loan consultant to consider this option as well. Another part in terms and conditions would be to align the payout date, so the disbursement of the loan with the contract, the purchase agreement you signed. In some cases, the bank allows you to or reserves the money for you for 6, 12, or even 18 months. Right? So they finance themselves. They get the 500,000 which you want. They finance it from somewhere else. Keep that money reserved for you, free of charge. And then at some point in time, you say, now I need the money, and then they pay out the money. Now, if they reserve the money free of charge for you for 6 or 12 months, you may say, look, I need the money immediately. I need it in the next 2 months. Could be waive off that option of you reserving the money for us, but instead making it available to us as soon as possible. Again, some banks entertain this, some don't. But it's worth a shot trying with your home loan consultant to see whether that option is available. The next step would be principal repayment. Now, as part of your equated monthly installment, your EMI, which consists of interest payment as well as repaying the principal, some banks say we want to have a principal repayment of, let's say, 2%. There are other banks which say if you're giving 2.5% instead, we're reducing the interest rate by X amount, right? So just check with your home loan consultant whether that makes sense to increase your monthly installments, and by doing so, reducing the interest rate. It's worth a shot. Last but not least, the most important part, which is having own equity. I already mentioned that it's a risk-based game for the bank. The lower their risk is, the lower your interest rates will be. The most important part on how to reduce the risk for the bank is bringing in more own equity. And there are going to be thresholds for the banks. I already discussed on the loan to value part. The lower the loan to value is for your home loan, the better your interest rates will be. Cash is king, and this is here as well. So if you're bringing in, let's say 10, 15, or even 20% of the full purchase price as own equity, the banks will love you for this and also give you a better interest rate.